Welcome, crypto fam, to the #1 daily Bitcoin pod. Bitcoin continues its correction, currently sitting at 83,500 at the time of the live stream. And in today's show, I'll be sharing the latest Bitcoin technical analysis, as well as the latest updates from Robert Kiyosaki, who says Bitcoin crashing, Bitcoin is on sale, and I am buying. We'll also be discussing Metaplanet buys the dip, issues 13.4 million in bonds for their Bitcoin purchases, as well as BlackRock Bitcoin Fund sheds 420 million as ETF continues its 7-day losing streak. We'll also be discussing Ken Griffin Citadel Securities planning to launch their own crypto services. I've been breaking down this report and why it's so significant. We'll also be discussing Michael Saylor breaking news. He just met with the House Financial Services Committee to discuss how we can make the U.S. the global leader in Bitcoin. You know, his proposal is purchasing like 20% of the Bitcoin supply, which is like 4.2 million for the United States. We'll also be discussing breaking news regarding the futures gap, currently sitting at 78,000, which is looking more and more probable that we close it. And speaking of bearish targets, we have Arthur Hayes just blazed, who has been calling for 70,000 as the bottom as the ETF exodus continues. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. If you're new to the channel, very important to smash the likes. Go ahead, subscribe, then ring that bell. Turn on all notifications to receive daily premium crypto news alerts every single day, 7 days a week, just like this. Today is pod episode 1918. I repeat, today is pod episode 1918. And markets are oddly enough in the green, but we are having a massive correction from the all-time high of 109.3, currently trading barely above 83,000 at the time of the live. It is February 27th. Only one more day left until the end of the month. Unfortunately, February is not going to be a good monthly close. It will absolutely close in the red unless there's a massive turnaround between today and tomorrow, which is unlikely. But nonetheless, let's break down everything you do need to know in the market. As you know, I'm your host, JV. I'm here each and every day. Let's kick it off with our market watch. As you can see, pretty little bitty, just above 83,100 at the time of the live, according to Coin360 at least. Ether down 1%, trading just above 2,200, as the majority of the major cryptos are correcting and in the red. Checking out coinmarketcap.com. The current crypto market cap sits at 2.78 trillion. The Bitcoin market cap all the way down to 1.6 trillion, which is pretty wild. 132 billion worth of volume for the past 24 hours, and the Bitcoin dominance back on the decline at 59.6%, with the Ether dominance also back on the decline all the way down to 9.9%. And checking out top 100 crypto gainers past 24 hours, WorldCoin leading the pack, up 8%, followed by Hype, up 7%, followed by Stacks, layer 2 for the Biddy network, up roughly 6% on the day, but the majority of the alts, as you can see, are correcting and in the red with very modest gains overall for those that are gainers. And checking out the crypto bubbles, we get a visual perspective. Let's start on the day. As you can see here, I'd say actually the majority of the market is in the green. It's just a lot of the top coins not doing so well today. But zooming out on the monthly is to tell the tape, like maybe 5% of the market even in the green, and those that are wrecked 30, 40, 50, 60 plus percent is pretty wild. It hasn't been a good month for alts, that's for sure. And checking out the crypto greed and fear index, we're all the way down to a 10 in extreme fear. The silver lining, the lower this number goes in extreme fear, the more likely of a pump. And we're all the way down to a 10. Can it go lower? Absolutely, but hopefully this carnage doesn't last much longer and we can continue to pump it up. Yesterday was a 21, last week a 49, and last month a 72 in greed. And checking out the time chain calendar, we're currently on block number 885,586. We have 164,414 blocks into the halving of 2028, and you can currently exchange one fiat monopoly Tulip Bulb Mania dollar for 1,204 sats. So as I say, pick up the sats, put down the gats, pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net. Let's dive into today's TA, aka Astrology for the Broskies. Headline here reads, Bitcoin retreats to 85 as the U.S. confirms March Canada and Mexico tariffs. And in breaking news, before we dive deeper there, Rich Dad tweeted, Bitcoin's a crashing, Bitcoin's on a sale, I am a buying. Why do I add the us? I don't know. Why? The problem is not Bitcoin. The problem is our monetary system and our criminal bankers. Amen. America's bankrupt. Our debt, including social programs such as Medicare and Social Security, including our $36 trillion debt, is over $230 trillion. Sad of the U.S. bonds, they're a joke. When countries such as Japan and China stop buying our bonds, inflation goes through the roof. Our economy and the US dollar will crash. Those are a few of the reasons why. And when Bitcoin crashes, I smile and buy more. Bitcoin is money with integrity. Fake money is a thief. I'd trade fake money for gold, silver, and Bitcoin anytime they go on sale. And I'll take it a step further. I personally believe gold is a scam. I personally believe silver is a scam. Why? They control the precious metal markets, as BlackRock controls every market except Bitcoin. They can try to manipulate it, and trust me, they do, but they do not control it because they can't print more out of thin air. They can't find more in the earth. And I digress. But check it right here. It's the 1 hour chart. Bitcoin drifted back to currently 82.83 range as of today for the Wall Street Open, as markets digested confirmation of the new U.S. trade tariffs, just like Nippinator digesting a bone and all that kind of stuff. Trading View showed Bitcoin pulling back for the relief bounce to 87 on the day. This followed a trip to a new 15-week low of 82 into the daily close, with the bulls once again running out of steam as U.S. President Trump doubled down on tariffs against Canada and Mexico. Due to begin March 4th, these will indeed go into effect as scheduled. Trump shared on Truth Social. Both the S&P and the NASDAQ opened down as a result, with the U.S. dollar index gaining 0.6% to cancel out more than a week of the downside. And reacting, the Kabisi letter shared, ironically, a lot of the flows back into the U.S. dollar. The U.S. dollar becomes the safest risky asset during trade wars because it is the most stable currency. And I think this is all by design. I mean, Trump's main priority or goal, reading between the lines, is to keep the dollar strong. I've heard him say this through his own mouth previous time he was president, when he was all totally against Bitcoin. The main reason he was against Bitcoin, he's like, my job is to protect the dollar and keep a strong dollar. And Bitcoin gets in the way. And lo and behold, don't think the agenda is any different. His whole objective, working for the Fed, is to keep the dollar strong. And apparently that's what these currency wars are doing, or the dollar index wouldn't be up and everything crashing against it, right? But Bitcoin ETFs have now seen 6 straight daily withdrawals, totaling negative 2.1 billion, and we'll dive into the mass exodus of the ETF market a little later. Bullish Bitcoin monthly close not looking good. Very improbable at this time, as I believe the 28th, I would assume tomorrow is the final day of the month. So unless there's a massive God candle or two, most likely we're closing in the red. And I'm going to cover some of the 70,000 range targets in a little bit, as more and more analysts are warming up and hinting or suggesting this. But there's only been one analyst that has been very, very consistent for the past month or two, calling for 70,000, and it's Arthur Hayes. So I'll entertain you with that. And we still have a lot to share. I actually didn't even pull up the live charts. I got sidetracked. So let's pull up some of the live charts. We'll do some live chart action, Jackson, for the broskies, of course. You should be able to see here in a second on your screen. This is the Coinbase exchange via TradingView, and this is the 1 hour chart. Obviously, past couple of hours, very bearish as the negative red candles continue to be printed on the hourly chart. Zooming out from there, see if it looks any better on the 4 hour. Not really. Past 12 hours have been red candles printed as well, unfortunately. We do have a bear target sitting at 81,799, not far from where we're at. Zooming out a little more. On the 1 day, the 1 day chart, also extremely bearish. 1, 2, 3, 4, 5 consecutive red candle closes. And again, we get the monthly candle close tomorrow. We do have some bear targets on the daily chart. 1 cent all the way down at 68,699. Ouch. That's going to wreck a lot of traders. And then we have one all the way down at 49. If you were to ask me, JV, what do you think are the odds of hitting 49? I'd say very low. I don't think that's a probable scenario to correct that low, considering the previous cycle all-time high was 69, which was, I believe, achieved November 10th of 2021. I don't think we fall back down that low, and if we did, shit's going to get scary. I'll just be 100 with you guys, but I don't think that's the most probable scenario. What about 68? Can that happen? Man, it can. Arthur Hayes is calling for 70. Stick around and I'll share his logic on why he believes we can potentially bottom out at around that range. And yes, there are CME future gaps in between, 70 and the 80,000 range. So that can happen as well. Anything can happen. Always be prepared and never be scared. Always have a strategy. Zooming out on the weekly, as we can see here, again, we're going to get a new weekly close. You can see it's pretty damn bearish thus far for the red candle you see on your screen. We do have a bull target, which has been sitting there for several months. It's a cup and handle sitting at 124. In order to achieve that, we got to first recapture the psychological resistance of 100K, flip it into support, and then re-enter price discovery, which is currently 109.3, which was achieved on January 20th, inauguration day for the Trumpster, before we could even really entertain 124 happening. But anything's possible. We'll see how it plays out. And zooming out on the monthly, as you can see here, we also get the monthly close tomorrow. And my bad if I said the weekly close isn't till Sunday, so if I mess that up. But anyways, this is now the monthly chart, and yeah, big bearish candle forming, unfortunately. Not much bullishness happening at the current moment. We got to, again, get back above 100,000 before we can reverse things. But nonetheless, that's where we're at in the market. You guys let me know where you feel will likely go next. And again, the silver lining for the Bitcoiners watching, which are all of you, one Bitcoin is still one Bitcoin. So if there's carnage in the streets, it's just going to shake out the weak hands, the cabbage hands, the Portnoy hands. Hopefully you guys are smarter than that and you don't sell to BlackRock and the rest of the whales. You feel me? Some bullish news here. Metaplanet buys the dip and issues 13.4 million in bonds for Bitcoin purchases. That's right. The Japanese Bitcoin treasury firm Metaplanet issued 2 billion Japanese yen, valued at 13.35 million USD, in bonds to continue expanding its BITI reserves, marking the latest move in a series of purchases that began May 2024. On February 27th, Metaplanet announced the fresh issuance of 0% ordinary bonds worth 2 billion yen to purchase Bitcoin. According to the notice, this was the 7th time Metaplanet issued ordinary bonds for making Bitcoin purchases. That was the official announcement from Metaplanet right there. Metaplanet will issue 40 ordinary bonds, each with a face value of 50 million yen. The bonds, which bear no interest, will be redeemable in full August 26, 2025. And according to the company, the purchase or the proceeds will be allocated to Evo Fund, Metaplanet's dedicated Bitcoin acquisition fund. And since May of 13th last year, Metaplanet purchased Bitcoin on 17 occasions, its biggest being the 619 BTC acquisition, December 20th of 2024. The company has accumulated a total of 2,235 BTC, valued at about 192 million. And while the company was founded in 1999, Metaplanet stock prices listed on the Tokyo Stock Exchange have struggled since 2013, up until Bitcoin came along, right? The company's shift towards Bitcoin accumulation has drawn comparison to Strategy, the US software firm founded by Mikey Saylor, which pioneered the Bitcoin treasury investments. Metaplanet stock has surged since it began acquiring the BITI, rising from 200 yen to 6,650 yen in early this year, marking a 3,225% increase in less than a year. So if you're a publicly traded company and you're thinking or pondering or entertaining putting BITI on thy balance sheet, just think about what they were able to achieve. Metaplanet stock up 3,225%. Strategy stock up redonkulous as well. And pretty much all the companies embracing Bitcoin are making the big moves. So it may be advantageous to at least give it some serious consideration. But still, its shares have since pulled back and currently trade at around 4,000 yen, I guess, with the current correction. During the February stock surge, Metaplanet announced plans to acquire 10,000 Bitcoin by the fourth quarter of this year. Very advantageous. And that intends to increase the total holdings to 21,000 Bitcoin. That's a blackjack, baby. By the end of 2026, which would be worth 2 billion in the current market prices, and I wish them all the success in the world. Shout out Japan, shout out Metaplanet, and those stacking the biddy and the Nippinator for giving us the next Nippinator indicator. Let's discuss these Bitcoin ETFs. Ironic, the number is bring facts around. BlackRock Bitcoin Fund shed 420 million, again 420 broskies, as the ETF losing streak now hits 7 consecutive days. That's right. Investors of the BlackRock iShares Bitcoin Trust, better known as IBIT, pulled out a record 420 million from the fund in a day as the Bitcoin sunk to yearly lows. BlackRock Spot Bitcoin ETF shed 5,000 of the biddy February 26th in its largest outflow to date, eclipsing the 332 million lost Jan 2nd. The massive outflow follows a record day of bleeding from the products on February 24th, when more than 1.1 billion exited on aggregate. It also culminates in a 7 trading day outflow streak that has almost seen 3 billion exiting the product. The BlackRock outflow brings the total days outflow to 756 million, according to preliminary figures from CoinGlass. However, ETF store president Nate Gerasi says he thinks it's a shorter-term blip. That's right. And we also have the Fidelity Wise Origin Bitcoin Fund, FBTC, saw a 7-day outflow streak, so it's not just IBIT, with a further 145 million exiting the product on February 26th, which was yesterday. We also have Bitwise, ARC21, Invesco, Franklin, Wisdom Tree, and Grayscale all seeing outflows ranging between $10 and $60 million. Crypto markets have extended the losses, with the total cap falling a further almost 6% on the day to 2.9 trillion, and Bitcoin dumping to now in the 82 range. The market correction now stands at 25% from the top, with 1 trillion exiting the space since the all-time high, December 17th. I don't understand the logic in that, because my understanding was January 20th is the all-time high. Correct me if I'm wrong, but we hit 109.3 on inauguration day, so get your shit together, Cointelegraph. However, crypto quant founder Ki Jong-yu said it would be a noob mistake to panic sell. I agree with that. And a 30% correction in a Bitcoin bull cycle is common, as it dropped 53% in 2021, and it still recovered to the all-time high. Quoting him here, buying when prices rise and selling when they fall is the worst investment strategy. And then we have the BitMEX founder Arthur Hayes, as well as 10x Research head, calling for a massive correction as low as 70,000, which we'll dive into a little later in the show. Next story. Let's discuss the Citadel, then Michael Saylor, and then we'll discuss a 70,000 potential crash, according to Arthur Hayes' Blaze. This headline reads, well, breaking news. Michael Saylor met with the House Financial Services Committee to discuss how we can make the U.S. the global leader of Bitcoin. But like I said, I'm getting ahead of myself. Let's touch upon the Citadel's security. Then we'll discuss Michael Saylor, orange pilling the U.S. government, and then we'll dive into the potential 70,000 target in play. So yeah, Ken Griffin, Citadel Security, is planning to launch crypto services. According to this latest report, the capital markets firm Citadel is reportedly planning diving into the crypto sector. Bloomberg, citing people familiar with the matter, reports that the market maker aims to serve as a liquidity provider for crypto assets. Citadel Securities reportedly wants to become a market maker on a number of high-profile exchanges like Binance, Coinbase, and Crypto.com, and the firm plans to initially establish international market-making teams. The firm gained confidence from President Trump's vocal support of crypto. As per Bloomberg, billionaire hedge fund manager Ken Griffin founded the Citadel Securities and the investment giant Citadel, which is a separate entity. He currently serves as the chief executive of Citadel and non-executive chairman of Citadel Securities. In 2023, Citadel Securities joined other financial giants like Fidelity and Charles Schwab in backing the crypto exchange EDX Markets, which exclusively caters to institutional investors. The market-making firm has also backed Hidden Road Partners, a startup prime brokerage focused on digital assets. And last month, Trump signed an executive order to evaluate the creation of a strategic national Bitcoin and crypto stockpile. The order also calls for the government to promote the development and growth of lawful and legitimate dollar-pegged stables created in the private sector. The administration's new leadership at the US SEC, the Nippinator, also rescinded Staff Accounting Bulletin 121, the controversial rule forcing the banks to identify crypto assets held on behalf of their customers as liabilities on the balance sheet. And if you don't know, now you know. So yeah, you guys let me know your thoughts with Citadel. That's extremely bullish news. Next story, let's discuss Saylor, and then we'll discuss the 70,000 crash. So yeah, Saylor just recently tweeted, on Tuesday, I had the opportunity to meet with the House Financial Services Committee and Rep. French Hill to discuss digital assets. Bitcoin, and how we can make the US the global leader in Bitcoin. The digital asset framework I presented during the meeting is attached below, so I thought it would be kind of cool to go through the framework. Here's some proof of work with Saylor, orange pilling the US government, and shout out to the Giga Chad. This is what it looks like. I don't know if you can see this clearly, and maybe I'll just read some of it. It's a very short read. It's only 3 pages. Maybe if I make it smaller, it'll show up better. Hold on a second. Let me see if that helps a little bit. I think it does. You should be able to see it all on your screen. But this is a PDF, and note fam, everything I reference in the show, I don't make it up. I find the information, and I always link to the resources in the show notes on Rumble and YouTube. So in the description, you can find all this if you're interested in downloading this framework from Michael Saylor, which he shared. But I'll read it to you. Digital assets, framework, principles, and opportunity for the United States of America. Number 1, taxonomy, defining digital asset classes. Establishing a clear, universally understood taxonomy of digital assets is critical to advancing policy and fostering innovation. And it goes on to break down digital commodity, digital security, digital currency, digital token, digital NFT, and a digital ABT. Number 2, legitimacy, establishing rights and responsibilities. Creating a robust framework of rights and responsibilities is essential for the issuers, exchanges, and owners to engage in digital asset markets with confidence. We need a path to legitimacy. We need rights. We need responsibilities. We need exchange rights and responsibilities, owner rights and responsibilities, and foundational principles such as no one has the right to lie, cheat, or steal. All participants are civilly and criminally responsible for their actions. Pretty straightforward. Number 3, practicality, rationale, compliance to empower the innovation. Digital asset regulation must prioritize efficiency and innovation over friction and bureaucracy. Standardized disclosures, industry-led compliance, cost limits of issuance compliance and maintenance compliance, streamline issuance with the goal to enable exponential improvements in cost, speed, quality, and accessibility via free market competition and innovation. Number 4, vision, a capital markets renaissance. The U.S. has an opportunity to catalyze 21st century capital market renaissance, unleashing trillions of dollars in value creation, rapid increase, cost reduction, access expansion, broader participation, investor opportunities, enabling access to thousands of digital assets. That would mean shitcoins, I guess, including tokenized commodities, real estate, art, businesses, teams, collectible, IP and brands, financial instruments, equity, debt, derivatives, and currencies, products, services, projects that provide value to customers, investors, and fans. And the final segment, 5, opportunity, establishing the United States as the global digital leader. A strategic digital asset policy can strengthen the U.S. dollar, neutralize the national debt, and position America as the global leader of the 21st century digital economy. USD as the global reserve digital currency, grow digital currency markets from 25 billion to 10 trillion, creating massive demand for the U.S. treasuries. Next, digital capital growth, expanding global digital capital markets from 2 trillion to 280 trillion, with U.S. investors capturing the majority of this wealth. Digital asset leadership, driving growth in digital assets beyond Bitcoin from 1 trillion to 590 trillion, with the United States dominating this industry. And as well as, he saved the best for last, strategic Bitcoin reserve, establish a Bitcoin reserve capable of creating 16 to 81 trillion in wealth for the U.S. Treasury, providing a pathway to offset to national debt. Conclusion, seizing the digital asset opportunity by establishing a clear taxonomy, a legitimate rights-based framework, and practical compliance obligations, the U.S. can lead the global digital economy. A capital markets renaissance fueled by digital assets will unlock trillions of dollars of wealth, empower millions of businesses, and solidify the U.S. dollar as the foundation of the 21st century digital financial system. And if you don't know, now you know. Now for our feature story of the day, is the Bitcoin price about to fill the 78,000 Bitcoin futures gap? And Bitcoin could be headed to 70,000 Goblin Town on the ETF Exodus, according to Just Blaze, Arthur Hayes. So let's break this down for you, considering we're currently at around 83,000 at the time of the live stream. So Bitcoin may finally reach a key downside target from last year as Bitcoin edges ever closer to the old all-time highs. Rec Capital flag an incoming gap in the CME Group's Bitcoin futures market. Bitcoin hit a new multi-month low around 82,000 as of yesterday. As you can see here, chart's not looking so good. There's the 1 hour. And despite this, fears still remain over where the market may put it in the next local bottom, thanks to the broad liquidity wipeout and lack of buyer conviction. The latest data from CoinGlass shows dispersed bid liquidity at around 80 Gs, which pales in comparison to the wall of ask up to 90,000. So for Rec Capital, there are two easy targets on the horizon. Bitcoin has created a sizable CME gap, both on the upside and downside. And if history is a guide, the price should eventually fill both levels, quoting the analyst here. Bitcoin is getting closer to filling the CME gap that created between 78 and 80,700 in November 2024. On this retrace, however, Bitcoin has developed a brand new CME gap between 92.7 and 94,000. We'll send it. Rec Capital noted that the upside gap matches the lows of what was until this week a 3-month-long trading range, quoting him again. This offers some confluence to the idea of price revisiting 93.5 at some point in the future as part of the post-breakdown relief rally, especially since Bitcoin has filled almost every CME gap that formed since mid-March 2024 thus far. So considering we're so close to filling it and what history shows us, I think there's a strong probability we do correct lower and fill these CME gaps. But you guys let me know your thoughts. Some markers are already calling for an undoing reversal to take place. And as I mentioned earlier, the Crypto Greed and Fear Index is all the way down to a 10, which is the lowest we have seen it in months. And diving a little deeper, Arthur Hayes just blazed, and the reason I'm even covering him specifically, he's been calling for 70,000 for the past couple of months when really no other analysts were. This was back when we were 100,000. So let's entertain some of his thoughts here with how the market's likely to react. He recently posted 2 days ago on X, Bitcoin gobbling town incoming, lots of IBIT, which is the BlackRock ETF. Hodlers are hedge funds that went long ETF, short CME. Futures earn a yield greater from where they found or fund short-term U.S. Treasuries. So if that basis drops as Bitcoin falls, which we are, then these funds will sell their IBIT and buy back the CME futures, which is what they're doing. These funds are in profit, and given basis is close to the UST yields, they will unwind during the U.S. hours and realize their profit. 70,000 ICU mofo. So he's ultimately calling for a bottom of 70,000. And we also have 10x Research head Marcus Thielen saying a big part of the Bitcoin ETF demand is from the hedge funds playing this arbitrage game rather than the long-term hodlers. And we discussed this in the previous episodes. There's absolutely manipulation going on in the markets, especially with the whales, but this is to be expected, and we've been calling it for a very long time. So there you have it. Lasercat also says that Hayes is more of an ETH expert. He is a crypto expert in general, and when I first got into crypto, he was the CEO of the largest derivative exchange on the planet, which was BitMEX, in which, in my opinion, got targeted by the SEC because they couldn't control it. And then they kind of put FTX in that place as the derivative lead of the world. And then they launched charges against him. And then they did that whole shakedown, getting as much money from him and getting him to leave the company so that they can control the derivative market through Sam Bankman-Fried's company because Gensler was complicit. But I know I'm preaching to the choir. I'm sure you guys remember that. But Bitcoin at a discount, price is a good thing.